Good afternoon, everyone. Thank you so much for joining us today and enjoying the AC on a 100-degree day. It was tough walking here today. Just so I can calibrate the panel today, how many people here actually work in crypto or at crypto companies? Oh, okay, so pretty much everyone. Is there anybody who's at a non-crypto company who's interested in stablecoins, might be looking at integrating them or adopting them? All right, so we got a handful of those too. So I think that's a good primer for this talk. Maybe for the people who are at non-crypto companies or even people at crypto companies who might not necessarily be in the stablecoin space, can you each just make the basic pitch for why stablecoins should exist, why they're so transformative?
Yeah, I can get started. First of all, thank you so much for having us here. This is a lovely space, a great turnout, so really excited to be here. So I think everybody here, when you send money, there's an illusion that your money moves fast, right? Like you send somebody something on PayPal or on Venmo, the other person instantly gets it, right? But we all know that's not the reality, right? Like really, it takes days to settle in the back end. Some other company or some other third party is taking the risk of that money not being there. Also, there's tons of middlemen and there's a lot of value being captured there. But what if you can remove all of that and make it a truly peer-to-peer, send value peer-to-peer, right? And that's what stablecoin does. And so we're super excited at PayPal to see what we can enable with that.
Well, that's certainly the right way to be thinking about it. I think stablecoins are better money. And when we talk to actually, let me introduce myself. So I'm Sam. I'm an investor on the A16Z crypto team. I started my career as an engineer, and from a distributed systems perspective, I was getting excited about crypto. I worked at the Boston Federal Reserve Bank on their stablecoin initiative. I had done some prototyping of various apps after undergrad, and I'd worked with payment processors and stuff. It's a really frustrating experience, I think, and it took just a couple of hours of playing around with stablecoins to realize that I, as an engineer, could sort of immediately get up, get started, build something that made sense to me in just one day, in a way that operating against Stripe or the other big PSPs, you get the illusion of that, exactly as you said, but it's not really happening, it's not really moving, and it's hard to program and work. So we talk about stablecoins, you can do a payment in less than 1 second that costs less than 1 cent, but you also have better money that's programmable and people can make more creative, better things. So we're excited about that opportunity.
So I think we can get a little more advanced. And before we really jump into use cases and how stablecoins could be used or are being used, I think one of the biggest challenges as we're on this precipice of adoption is there's just so many options out there. And it's sort of unclear what the future of stablecoins are going to look like. Obviously, you have Tether, which a lot of people don't want to use because of compliance issues. You have USDC, whose company Circle has exploded since its IPO, but whose ownership structure may look a little opaque. Obviously, PayPal has a stablecoin, although I think adoption is still behind the other big options. It seems like there's a news report every week of some other company or consortium launching one. I'm curious from both your perspectives, and obviously you'll have very different ones, what you think the future of stablecoins are going to look like. You're going to have every company that has their own one. Are they going to be interchangeable? How can people who aren't in the space think about how they should actually start entering it and what they should be working with?
You want to start?
Yeah, I can go, yeah. Actually, at PayPal, it's very interesting, right? Because for us, what we are good at is the network, right? What we have is a network of consumers. What we have is a network of merchants. And there are tons of problems that we have to solve for them, right? And we look at blockchain, stablecoin, crypto in general as a tool to solve these user problems. So to your question of what is the future, I don't think there's going to be a winner or a single stablecoin to rule them all. I do think that there will be many different stablecoins, and so it's also indicative of what people are building, right? You'll see a lot of orchestration services that enable people to move from one stable to the other without knowing what chain, and I think that's the future, that it'll be cross-chain, cross-stablecoin. There's not going to be one big one.
Yeah, I think I totally agree. But maybe just to get a little bit deeper, luckily I have this vantage point of being an investor, and I get to see all these businesses that come in and are building either stuff with stablecoins, maybe they're issuing stablecoins, they're orchestrating stablecoins, or they're enabling stablecoins by being a layer 2 or layer 1 blockchain. Or so that's how I begin to think about it is where are you sitting in the stack? And I try to take a really expansive perspective on what the stack is. We've made a ton of investments in the layer 2 blockchain space that ultimately were key enablers for 18 months ago when L2 sort of really took off. That's when it cost less than 1 cent and less than 1 second to send a payment. And so for us, like that is another way of investing in the stablecoin space. But what does the future look like? Well, the future is going to have this core group of issuers, some orchestration, enabling technology like Dynamic, who's making it so much easier to custody and build apps that use stablecoins. And then there's going to be the apps that are actually using stablecoins on top. So over the winter, I must have talked to 15, 30 remittance companies, all of them growing at like 10% a month. I guess, we're seeing agentic payments as well. We're seeing streaming payments. We're seeing really interesting, creator payments products. I don't want to simplify basically the answer too much and give just like one world of the future. There's all these places that you could step in, and all of them are growing quite quickly right now.
And then jumping into use cases, and maybe we can go back to what actual adoption looks like and how to think about the stack. But in the beginning, stablecoins were really only used for crypto trading and settlement. There was always this promise that they could be used for cross-border payments, for remittances. I think that's still a buzzword that you hear a lot without necessarily it being adopted at a wide scale. But I'm curious, for both your perspectives, having been in this space for a while, where are you seeing right now actual use cases taking off that aren't crypto specific, where it can actually start to be adopted by non-crypto companies?
I'll take that one just because I'm just building on what I was just talking about. Like we saw a ton of remittance companies this past winter who are building better products on top of crypto rails, and the users don't necessarily know that they're using crypto in the first place. This is a pretty dramatic restructuring of the remittance space, where today, if you're sending $200 from the US to Colombia, that's going to cost 6%, $12 for a $200 remittance. And the people who are making a $200 remittance are often the people who are, they need to make that remittance, but they're also quite cost sensitive. Like this is someone for whom that cost is really hurting, potentially them or their counterparty, their recipient in Colombia. And with stablecoins, you can do two things in that scenario. One is you can send a stablecoin directly to their wallet address. You're creating then the ability for the person in Colombia to save in a dollar denomination, which might be useful if Colombia has a period of high inflation. At the same time, you're creating a much more competitive market in just one aspect of the remittance process. So instead of today, where someone's likely to own the whole flow from the user in the US to the recipient in Colombia, tomorrow you might have a world where the consumer in Colombia actually can go source their own off-ramp or have a credit card that's attached to the account or this or that. And I think ultimately we're seeing rates fall from something like 6% to something like 2%, 1% over time, which is just a much better scenario. So that's the first and best example from the last 6 months.
One thing I'll add is like PayPal owns Zoom, which is also like a remittance company, right? So in remittance, we're seeing two kinds of use cases. One is the user facing, right, which is you directly send a stablecoin. What we've been doing at Zoom is actually the user agnostic, which is completely the backend. The way remittance works, like traditional remittance works today, is that you have distribution partners in all the countries. You pre-fund them for 24 hours of business. And at the PayPal Zoom scale, this is hundreds of millions of dollars every day. And what happens is that there's a lot of capital that's locked in, and there's cost of capital. So what we've been actually working on is that we are now actually pre-funding, but only for like 10 minutes of business, right? Because now you can pre-fund, you don't have to rely on the banking hours, no weekends. And so we're actually just also making the existing remittance kind of framework and construct much better by being able to pre-fund for much, much smaller time period.
Just one more thing, because I don't want this to be like a remittance panel, even though it's one of my favorite use cases. I don't know if you guys have tried any of the products that are on Farcaster let you do like streaming payments to creators. I think that that scenario doesn't necessarily seem like it's going to change the world today, but we're not even in inning one yet. Like it's just that we have the capability, and we have the cost structure, and we have the programmability, and we're at the beginning of what's going to be I think, a Cambrian explosion of creativity in that space. And so I like to picture what happened in something like 2010 when the hyperscaling cloud networks made it, like Azure, AWS, they made it really easy to build a SaaS product. And you know what happened? Now we've got like 10,000 SaaS products for any range of use cases. And I think we're going to see a similar level of specialization and creativity on top of payments that we just haven't seen because it wasn't possible before.
You're always going to have skeptics, but I did think it was interesting that the CEO of Airwallex, which is one of the biggest international payments companies, had this big head-to-head with crypto Twitter, where he was basically like, no, I don't think crypto is actually solving anything. It's not lowering payments. You still have the off-ramp issue where you're going to have high costs. And you had a lot of what's typical on crypto Twitter, a lot of people just calling him dumb. But I'm curious, you do have this CEO of a $6 billion payments company basically saying this doesn't actually work the way that you say it is. I'm curious how you respond to critics like that.
You should respond, but I just want to say, he had a great redemption arc. Follow his Twitter. He started by saying, I'm not sure this is really going to work. And then over the next few days, he started saying, oh, here's where it might work. Oh, I've been educated. So I just want to give him credit for sort of coming around to some of the key issues and reasons why he hadn't fully understood the use case of crypto in FX or crypto in remittances.
Yeah. I mean, I think I kind of agree, right? Because at PayPal, we always say we are in year 5 of a 10-year journey, right? Today, it is really hard when we're launching crypto products. It is hard because we are seeing a lot of challenges with adoption, right? When you look at the businesses, large businesses, they're still very skeptical about holding stablecoin on their balance sheet, right? The also challenges have been is if you pay an invoice in stablecoin, the end-to-end is not connected. Your accounting systems are not connected. Your tax systems are not connected. And so what we're seeing is even though we pay invoices in stable, it is instantly off-ramped into dollars, right? Because that is now connected. So I kind of agree, but I think the vision we have at PayPal is that with the network of consumers, with the network of merchants, when you start getting it in the hands of people and you build utility, right, which is, are you able to check out with this? Are you able to pay for things with this? So that's when the flywheel is created, and that's where our bet is, right? That how do you bring utility to the consumer flywheel and the merchant flywheel?
I am curious though, because this is always the case with crypto where there is so much hype and so much excitement around what could be, and it always seems, just a bit in the future. And it seems that way with stablecoins, which are on that precipice in so many ways. But I was talking with another fintech CEO, I won't name the company, but he was basically saying, I actually have no organic demand for stablecoins or crypto. Like, it's almost all coming from the crypto industry saying, we should make this happen and making the arguments for it. And I am curious from both your standpoint, like where you do see those big roadblocks or the areas where you don't think that this will actually be able to work, or maybe right now it's not working, that you want to highlight.
So do you guys know the term crossing the chasm? Does that ring a bell to people? I'm seeing some nods. The concept is that you have a technology that's being used by early adopters, us in this room right now. And the mainstream doesn't yet have the tooling and integrations or the demand they need to see why it's useful. And stablecoins are crossing the chasm today. Like over the course of the next year, we're seeing people build the tools and integrations. You just sort of brought this up, but you need to have integration into like an ERP, into enterprise resource planning. You need to be able to pay invoices in stablecoins. In order to have stablecoins become part of mainstream, we're going to need integrations into the thousands of services that we don't think about in this room because we're early adopters. Okay, so obviously we're bullish. I think that the question is like, where is the organic demand going to come from? And we really are seeing structural demand for dollars. That is completely confirmed. In any high inflation country, one of the most sought after things you could have is a dollar, and stablecoins make it much easier to build an international dollar account. Stripe, an unbelievable company, and fintech, they added stablecoins in order to expand from 40 countries they could support payouts to 170. And so stablecoins allow them to reach a much larger market, and there clearly is structural demand there. Now, that's not a group of people, those countries, the last 130, are not countries that are driving a huge amount of volume, but it's one sense of where you're seeing organic demand. And then on the B2B payment scenario, another area where we're seeing a lot of growth, people are just tired of waiting 3 to 6 days or even 2 hours. They want to see it in minute one. And so the demand is there, it's just early.
We're seeing some organic kind of demand coming from, like, the payout space, like the gig workers that you want to pay cross-border. So that's interesting because, like, we have a product that does mass payments, and we actually just included PYUSD onto it. And it's interesting because I think, the large companies don't really get it still. But when we actually went and told them that, hey, this is what we're building, they were like, oh, does this mean I can get creators from Africa on my platform now? Because I didn't have a way to pay them before. And so I think for companies, it's slowly coming together as that they're actually increasing, like, their reach. And I think that once you start building on the consumer side of it and the ability for large companies like this to make payouts, I think it'll organically come.
Quick plug to Fortune Crypto. Go read our coverage on this. We've written about how big tech companies are starting to look at payouts specifically. But I think one of the reasons that's happening is because it seems like legislation is going to pass in Congress that will cause some of those regulatory unlocks where a lot of the bigger tech companies, a lot of the banks maybe weren't willing to enter the space. Now they will if Congress blesses it. But there's still a question whether that bill is going to pass, and we don't have to get into that deeply. But I am curious from both of you, where you see those headwinds. What happens if a bill doesn't pass? Are you still going to have a willingness for non-crypto companies to come into the space if there isn't regulatory clarity?
It's an interesting question. I mean, I think we're lucky to have a really big policy team that is spending a lot of time thinking deeply about where regulation and legislation needs to go. It seems like there was a lot of support for the Genius Act as it moved through the Senate, and that's really exciting. Rather than get caught up in the weeds there, though, the big thing is that if and when we get clear rules of the road for entrepreneurs and big companies to adopt stablecoins, it's that clarity that's going to allow them to experiment and drive more demand and create more use cases. Now that we've begun to get some of that clarity, we're seeing that engineers and businesses are gravitating towards stablecoins because they're better money. So I think we're going to get great regulation. I think we're going to get clear rules of the road. But the biggest thing that I've been excited about recently is just the education that all these entrepreneurs are getting on how they can now do more interesting things with money online.
I think PayPal is like a global company, right? And so while we're super excited about, like the shift here in the US, I think we've seen clearly that in Europe and Singapore, that clear regulation kind of brings adoption. So we're super excited as to where this will go.
So maybe we can end on a more educational note. Do you have advice, and it's going to be different advice from both of you, but for companies or people who are interested in getting into the space or integrating stablecoins into their apps or their platforms, what steps do you take to do that? Obviously, use PYUSD and don't use USDC or Tether or anything else, but besides that.
But we're also at a dynamic event right now.
Obviously use dynamic.
Yeah. So I'm a product owner, right? I think the consumer or the customer is at the center of everything you build. As somebody mentioned this in the panel before, right? Which is that today it is super complex, and how do you build products that abstract that complexity out, and it's as easy as sending a text message to your friend, right? So I would say when you're thinking about products, user experience first, and I think compliance first mindset also in the long run, I've always have found that leads to a more stable product. So in my head, compliance first and user experience first.
Yeah, there's so many opportunities right now. It's just unbelievable. There's there's a group of opportunities that feel really tractable and clear to me, which are how do we make stablecoins integrate with existing payment systems? How do we get them into ERPs, into Salesforce, into SAP, into invoicing technology, and into point of sale systems? I think that's there's unbelievable value to be created by you all building things in those spaces. And then there's going to be, there's the reseeding application layer. It's the remittances and the B2B payments. And then the thing I'm frankly most excited about are what ideas can you pursue now that you can only build on top of better money? And I listed some of them, maybe agentic payments, maybe streaming payments, maybe it's creator payouts, maybe it's new IP revenue splitting. I luckily get to see a lot of these ideas, and I'm not sure what's ultimately going to fascinate the consumer, but I know that we now have this opportunity for experimentation that is just so exciting and feels so refreshing, and that's one of the areas I'm most excited to think about.
The one area I'm super excited to see what comes out is actually the supply chain, like global supply chain. I mean, there's a lot of components that exist, right? You have the ability to write smart contracts, you have stable coins, but I haven't seen like a product out there that's helping solve that. So I'm super excited about what's going to come in that space.
Yeah, just last question along that vein. Sam, what's your favorite stablecoin related pitch that you've seen recently? And Smitha, what's your favorite use of PYUSD you've seen recently?
I don't love to pick my favorites, but I do think that I'll just tell you a scenario that I had that was it was so fun. I play basketball. I rent this gym in Chelsea, and usually people Venmo me after because it's like $400. For instance, it'd be $20. And someone knew that I was tweeting a lot about stablecoins, like, give me a follow. It's relentless. But this guy comes up to me and says, "Can you mind if I send you USDC?" So he sent me USDC. I get it like 2 seconds later. It costs a fraction of a cent. And by the time we had finished the conversation, I'd also staked the USDC and begun to earn interest on it. And the fees the cost of sending the money, well, staking it paid for itself by the end of the weekend. So just this like really modern way of thinking about sending money. And I get to experience things like that all the time with the products that we see daily.
So I think for me, for the best use of PYUSD, actually I'll say two things. One is I'm super excited about accepting crypto payments. So we've always known that if you want to shop on an international merchant, it's like 6% credit card fees. But now the ability for you to actually do that with extremely low fees, I think that'll be like spectacular. So I'm excited about payments, just a consumer to business payment. Also super excited about like large enterprises, B2B. To your point about getting stablecoin invoices within ERP, like we did that with SAP, we're seeing a lot of traction. So I think those are the two use cases at the different end of the spectrums.
Sam, you opened a can of worms with staking, which we could go into, but we won't get into that. Thank you so much to the panelists. Thank you for listening today. Have a great afternoon.
Thanks for having us. Thanks, Dynamic and team.